Hey everyone, it's Chris from Axel as well as Solstice. You can find me on X, Instagram, Discord, as well as the YouTube channel. The weekly video is for free for everyone on YouTube. You can hit the subscribe, share it with your friend, and let us know what you think and give us your commentary. We're not a broker dealer. Past performance does not give us any future results. Use at your own risk, and data may not be copied unless requested from both websites or get in contact with us directly. Let's go to the first slide that I have up here. And what I did, I said, is this a blow off the top in the stock market? Because it's very important to pay attention to the Fortune 500 company as well as the NASDAQ 100. The NASDAQ 100, because since the Mega 7 or the Fantastic 7, I use the Mega 8, I have included in there Netflix. I put the New York Composite NYA, XLK, the tech sector, IWM is a small cap, Dow Jones Industrial Averages. All these are ETFs, including SPY and QQQ, the Fortune 500 and NASDAQ 100, versus the dollar, the VIX, and the bond market, which is the IEF, the 7 and 10-year notes. We have to pay attention to the tariff, what's going on in the overall market due to Trump and the August deadline, if there's going to be extensions, no extensions, or it's going to cause an effect on the overall consumer products and staples, as well as technology and manufacturing, including the steel, and the Russian war in Ukraine and what's going on between Trump, the Eurozone, as well as the global market. So let's go to the next slide. Remember, where to check us out, get in contact with us. We're here to help. And let's go to the first slide. And what I did, I put the New York Composite up here because it represents the New York Composite, which is more than 2,000 plus companies. If you can see the annual high and low, this was the last year's annual high. We tried to look up in January, February. We eventually fell down when the tariff got kicked in and Trump said, hey, I'm going to increase interest, tax tariff on everyone. We dropped down here. Then they said, hold on, we'll extend the tariff. And we rallied up after April 16 and the 22nd. We rallied higher. We cleared that triple top or four tops up here. We looked above. We created an M. But if you can see, when we were going up, the RSI was in a downslope here. We tried to rally. We looked above, which is what we call, look above and fail. And we had the last 5-6 days sell off. This is Friday, Thursday, Wednesday, Tuesday, Monday, because we looked above every day. We looked up, we failed, and eventually we fell through. Even on the earning report, it's showing that there is a little bit of divergence between the RSI going up as well as going down. And when you can see, when we were going up here, we had that double top, but we started to go sideways here and the RSI was getting weaker. Then we fell further down and you can see that there was weakness in the market. When we rallied up, we couldn't make the 50%. We looked above and failed. This was the bottom, and we can draw an uptrend channel on that NYA, New York Composite. The reason why I wanted to do this is just to show you that you can connect the control point or the signal alerts or the pivots, they call them. These are supply and demand zone. I would connect the bottom. Most people will connect the body. They don't look at the wick, because usually the wick, there is exhaustion in the overall market. When you get exhaustion, there's a tendency to continue higher or reverse back from that wick up or wick down, because there's either supply or demand, and vice versa. We can draw a downtrend channel this way here, and I can draw a downtrend channel between this point and this point. You can see that the computer grabbed this high to this high, and you can see you are in an open code. We are in a downtrend. We had lost the RSI 50% and looking further to continue to the 38.2 or the 40%. And if we lose that, we look for the 30 and reverse back. If not, we look for the 20 and the 15 in the RSI on the New York Composite. This is why I wanted to show the new, because it represents the overall market. Let's take a look right now. The IEF, which is the 7-10-year notes, we can see, because Jay Powell didn't do anything. They were talking about the September. You can see that we spiked up. Is there going to be a decrease in interest rates? We have to pay attention to the overall market. And you can see that the RSI is making a rounded bottom, and that started to look above. I can draw an uptrend channel on it, or you can draw an uptrend channel between this point and this point here to see if we continue higher or we look above and fail. This is on IEF. Let's take a look at the VIX, which is the fear in IF. You can see in the VIX every time we had, this was the April spike, we fell down. Every time we had a little glitch, on the noise of the tariff increase or rates and stuff, we have a spike, then we fall. We have a spike, then we fall. We have a small spike, then we fall. We have a spike and fall. This week, if you noticed in the VIX has started to climb, cleared the 50, because every time it tried to clear the 50, it failed. Even on those spikes, you can see it never made it to the 50%. This time we looked up, is it going to create a cup to continue and clear that 22 area, 23, in order to continue higher? So we got to pay attention to what next week going to bring us. I'm thinking next week it's going to take us between 5 to 8 days to see, by the, not just next week, Monday, Tuesday, by the following week, that there's going to be a correction up to the 50 simple moving average or a little bit below it and look back up. So that's on the VIX. Let's take a look at the dollar, the DXY. The dollar was trying to climb up. You can see here, after it fell, it looked up and it couldn't make it up and continued lower. Then we created a shoulder ahead and a shoulder on an angle which spiked up but could not clear the last year's low, and we fell further down. So we got to pay attention to the 2024 area, which is around the 100.2. This is very 100.2 in the DX, in order to be, there's going to be continuation and strength in the dollar in relationship to the gold. Okay, I did not mention gold, but I'm gonna do put the GLD here, because I want to show that gold has been, after all this noise happening, we've been range bound in the last 3 months. You can see from April, now we're starting August, we had April, May, June, July, side action back and forth in this range. If gold's going to spike up, we're going to pay attention to the 320 and above. If it's going to fall below the 300, so pay attention to gold. Let's take right now the SPX, and I wanted to show the SPX, which is part of the Fortune 500 company. You can see in the SPX, we got the energy sector here, discretionary, financial, utilities, material, consumer staples, info technology, real estate, industrial, healthcare, and telecommunication. These are the electronically traded funds in the S&P 500. You can see, after looking up, you can, if even if I draw an uptrend channel between this point and this point, I can connect these 2 points up. We are in an uptrend, you can see it, but we looked up. Every time we looked up, we sold off. We looked up, we sold off. We looked up, we sold off Thursday. Even on the earning report from Apple, if I zoom in from here, from the April, we have these gaps. I had put them on the charts, and we continued higher. If I connect these points up here, this point to this point here, you can see we tested it. We were in that uptrend channel, and now we are trying to lose it. If there's going to be continuation, I am paying attention to this gap here. I'm going to change the color on this gap on the top and make it more into like a pinkish color instead of a blue going down. I like the blues. Edit the property, so I'm going to make it a little bit off, like a purplish pinkish color, so everyone know where that gap is on the top, going back up to fill it or not, or there's going to be continuation towards the 50 and the consolidation of the prior year 100%. That's 6,099.97 on SPX, and the 50 SMA. We got these 2 gaps in here to fill in case we do fall a little bit further down in the SPX. The Nasdaq index consists of the Mega 7 or the Mega 8, the Fantastic 8, and you can see I have them listed here. The Mega 8 part of the Nasdaq is Apple, Amazon, Alphabet, Google, and googl, Facebook, which is Meta, Microsoft, Netflix. I included Netflix, nvda, as well as Tesla, and you can see that there's a gap. There's your 50. There was a lot of consolidation in this area. When we looked up, we got this gap here, we got another gap here, another gap here, and so on and so forth, and one more here. So I'm going to pay attention to the Nasdaq 100. So I'm going to go in here, change the color, and I'm going to show you the Mega 8, which consists of you can see that when we were consolidating here, when we fell down, rallied back up after, announcing, hey, there's going to lay off of the tariff, we were grinding up. We looked above here, even on the report, on the earning, we fell back down. my concern is if I end up losing the 50 simple moving average, I'm looking at the control point down here in the 116, which will catch up coming up this way in relationship to that control point where there was a lot of consolidation here and in the prior year 2024 and the 2025 up here when we couldn't look up. We fell down, rallied back up. This area has a lot of volume in it on the combo of most of those instruments, and you can put an oval here to pay attention to that area, which is the consolidation on that. So if I disconnect it here and I just use the word Tesla by itself here, I want to show you the consolidation of Apple. See that Tesla has not been able to clear the 340 area 335, and when it falls down it's been in the 300 range. That 116 SMA is very important because if it ends up losing it, because they are losing a little bit of money coming back, from the highs to the low for the year, you got the 61.8 and the pivot point where we pivoted from on this candle at the 273 275. So I am paying attention to this area on Tesla. Let's take a look at the Apple. And you can see Apple, even it had a nice earning report. It looked up and it eventually failed on that big candle on Friday. Look above and fail. Even, you can see Monday, Tuesday, Wednesday. I mean, this is Thursday, Wednesday, Tuesday, and this was Monday, an inside day when we were going up. The RSI was a little bit weaker and pointing down in Apple. Let's take a look. VU, I will do VU instead of the SPX. And what I wanted to do, I added these, up linear regression uptrend channel. I left this gap here and I left this little gap here, and there's another one between here and here. So I am paying attention to that 50 SMA and the consolidation of that first gap in this area. If I end up losing it, I'm looking for the control point where we tested this area, look up, retest and bounce up. So this is an area to consider in the S&P 500. Let's take a look at Dow Jones Bridge dollar sign DJX. Oops, sorry. Dollar sign JX. Oops, dollar sign DJI. Sorry, my fault. You can see that on this week since Friday, we have that big gap. We tested the 50. We have this gap here. There was a lot of consolidation in June, July. Coming back to this area, and the 38.2 is very important in the Dow Jones average. Let's take a look at the IWM, which is a small cap, or the N, which is the value or the growth. You can see on the N Russell value, you can see that we fell down below the 50. IWM is in a similar situation. And if I take a look at the IWF, which is the growth of it, you can see we looked above and we failed, because remember, we got to look at the micro and the technicality of the overall market. When we were going up, the RSI was grinding sideways and eventually fell through. So this is why I showed these different ones. On the small cap, I'm going to do the measuring tool, on the S&P as well as the NASDAQ and call it a day. Let's go in here. You can see on the daily, the S&P 500, where I had this oval and this oval. I said either way, when we're consolidating here and here, we either will test the 200 SMA or we'll test the upper channel on that linear, which we looked above and eventually failed. If there's going to be continuation, what I want to do is measure the distance from this high all the way down to let's say this is a 10% move. It's going to be around this area. Where is it? Almost there. There we go. It's about 58 20 area. If I'm going to get a 7.5%, it's going to be around 59.83. If it's going to be around 6100, that's going to be about 5.7%. And if it's going to be around 61.45 and the 50 SMA, because it'll catch up in this area, that should be around 4.5. Let's say you're losing on the S&P 500. You can see on the top, the S&P range on the average true range is about 70 points. If I split it in half, that's what 35 points either way, 34 points going up and down, in that consolidation to catch up and get to this area. It's going to take it about 7 to 8 days to get there. So that's what I am looking at. If you're going to do the measured move, you go from the daily to an intraday. We can do at 30-day, 6 hours. And what I can do, take a look at the high to the low for the week. Go get a measuring tool here. It'll calculate the highs and lows for me, and I can extend it to the left to see where the edit the property. And if I want to go back 1 month back, I can go like here. I can go 651 or 61. You can see 531. It's fine, and you push it, and it'll give me the overall ranges of where the consolidation happened in this area, where it comes back to that zero line, look above and fail. And if there's going to be continuation, this is 100% extension to the bottom. Or if there's two standard deviations, you duplicate the 0 to 100 to minus 200 and vice versa, going back up. So this is how you look at the measured move on the S&P 500. We can do the Q, so everyone can do the measured move on the QQQ instead of the SPY, because we did the measuring move on the ESE mini. Edit the property. You can see in the same situation here, and I can go 5-1. I can extend it to the left, and I can see it. If I go from the intraday charts, now I can see where that consolidation was in this area, where the measured move possibility of coming down and losing that 50 SMA, coming back to this consolidation area. And that's the annual chart from the prior year, Fibonacci highs and lows for the year. It's anchored. You got this look. We looked above, we failed, we rallied back up on the S&P 500. If you have any questions, we're here to help. Let us know how we can help you. Take care. Over.